Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Shreve here with a breakdown of the action in today's session, Thursday, August 22nd, where we saw some selling ahead of Powell's speech tomorrow at Jackson Hole. The Fed chair expected to comment on where we're at with the interest rate cut cycle, highly anticipated, Ken. And I mean, we've seen the market rally so strongly over the last couple of weeks. We finally got a little bit of a shakeout maybe in the market.
Yeah, and just a nice rally off lows for the Nasdaq. Kind of a volatile day for the Nasdaq. Pretty sharp drop right down to that 50-day moving average. But we'll make sense out of it all. I want to talk about three stocks today. First is going to be on holding, ONON. Tried to break out yesterday, closed in the bottom half of its range, but nice low volume decline today. Also, PDD. This is a China stock. Don't talk much about China, but this one deserves credit for outstanding fundamentals ahead of earnings. And finally, DoorDash that we have on the leaderboard watch list, DASH, and setting up in a nice looking base here.
Okay, well, we'll take a look at those stocks, but first let's take a closer look at the major indexes. The Nasdaq today down almost 1.7% and leading on the downside. So definitely a tech-driven sell-off here. It seems, Ken, the S&P 500 down 0.9% today, and you can just see a big outside day to the downside here for the major indexes. The Dow down 0.4%, and the Russell 2000 off today by about 1%. We've seen big swings in both directions for the small caps. No surprise. That's what tends to happen. But here's a look at the Nasdaq. A very interesting day from a technical perspective.
Yeah, right down to the 50-day moving average. We'll see what that test looks like tomorrow. Mentioned Fed Chair Jerome Powell is going to be speaking at 10 a.m. Eastern Time. Normally, we get a little glimpse of the speech beforehand. We'll get little pieces, so we'll see if that happens tomorrow. But it's interesting right now. The market is expecting 100 basis points of rate cuts between now and the end of the year. So basically, 3 Fed meetings where the market's expecting 100 basis points of cuts. A guy I follow very closely, Ed Yardeni from Yardeni Research, is really in the minority, thinking it's going to be one and done because the Fed's fight against inflation is over. So we'll have to see how the market reacts tomorrow. But you see volume picked up the pace a little bit on the Nasdaq today. Still well below average, but higher than Wednesday. So this is going to be the first distribution day since the follow-through day that we saw, several days ago. So market uptrend is still intact here. I think tomorrow is going to be a pretty telling day for the stock market.
Right. And the Nasdaq came right up to that 18,000 level, got rejected there a little bit, but honestly, not surprising to see stocks take a break, some profit taking ahead of the potential volatility tomorrow. And again, we've been running up so much. So we kind of expected to see a day like this, I would say, a bit sooner in the market's rally attempt. Not that there was any sort of prediction, but I'm not too surprised to see something like this here, Ken.
Yeah, no. Earlier this week, Juan Arancibia mentioned in the big picture 2 things to keep in mind about this market: that the Nasdaq and the S&P 500 are kind of getting into overbought territory here. Just looking at basic oscillators and stochastics. So but again, it's been there you go. Yeah, big. So you can see the overbought, oversold oscillator getting up near highs where the Nasdaq has pulled back before. So again, just because we get one distribution day, not no reason to head for the sidelines. Breadth was weak today, but wasn't terrible. It was about 2 to 1, a little more than 2 to 1 negative on both exchanges. But as we talked about on IBD Live this morning, there's still a lot of stocks out there acting very well. So still have to give this uptrend the benefit of the doubt for now, I think.
Okay, well, we'll have to see if there are any sort of fireworks come tomorrow or how we may need to roll with the punches, Ken, because I feel like if you're looking at today's high and today's low, those are 2 key levels. Will we get some signs of encouragement and see the Nasdaq get above 18,000? Will we see some more fear come into the market and close below the 50-day line? or something in between. I think that, but those are on the upside and downside. Those are two key levels to watch, and what could be a topsy-turvy day tomorrow. We don't know.
Yeah, well, when you look at the market of stocks, I mean, there's a lot of stocks out there that are, too far gone and way too extended past proper, buy points to consider buying. You're still seeing some stocks that are dancing around buy zones, but I would say the vast majority are pretty far extended right now. So the market to me right now seems like it's in no man's land. We're still in a confirmed uptrend. We still, think that exposure 60 to 80% makes sense. But I have to tell you, when you're going through the growth screens, it is getting harder to find actionable setups. So sometimes you just kind of listen to the market's message there, take the foot off the accelerator a little bit, and maybe just see how the market trades tomorrow. I know there are a lot of bulls out there that would like to see just an orderly pullback. Wasn't an orderly pullback the last time we fell sharply on the Nasdaq, and it wasn't really an orderly pullback today either. So could see some volatility tomorrow, but yeah, just kind of tough right now because there's not, just a lot of stocks out of position at this
Yeah.
point.
Yeah, that does make it difficult for new buys, certainly, and even for recent buys. We'll have to see how those might be impacted come tomorrow. Thoughts on the S&P 500, Ken, intraday inching ever so closer to those prior highs, but of course down on the day. This one holding up a lot better versus the Nasdaq, I would say, at least if you're looking at where it is positioned in relation to that 50-day line. We've still got
Yeah,
some room there.
looks like lower volume on the NYSE today as well. So slightly higher volume on the Nasdaq, slightly lower volume on the NYSE. So it looks like the S&P is going to avoid a distribution day. But yeah, I mean, definitely a sharp drop for the bogey today. Came within about 25 points of that all-time high set several weeks ago. So kind of ran into an area of resistance, just like the Nasdaq did today. So we'll see how the market sorts itself out tomorrow. But good to at least see lower volume behind the Nasdaq's decline today.
And here's a look at the Dow. It too getting close to recent highs, closed a little off the lows today, still well above the 21-day, 40,000, and the 50-day here as well, Ken.
Yeah, and we're going to have a big earnings report in the Dow next week. It is a laggard tech stock, but Salesforce CRM is going to be reporting earnings next week. You can see this stock is really kind of troubled on a downtrend, getting some resistance at the 200-day moving average. But like the S&P 500, the Dow is kind of bumping up against some resistance levels and pulling back. But still in a good setup here, and we'll see how the market sorts out this speech on monetary policy tomorrow.
Speaking of, do you think that small cap stocks are potentially the most vulnerable to a big swing, given how you have that ripple effect? Whatever the Fed says clearly has an impact on how people are looking at the bond market, and that interest rates that flows over to small caps. They're very sensitive.
Yeah, no doubt about it. So I think the market, right now is still assessing, what corporate earnings are going to look like in coming weeks over the third quarter, fourth quarter. Is there going to be an economic slowdown that's gonna impact corporate earnings? Yes, lower interest rates tend to be good for small caps, but this index is definitely the laggard compared to the other three that we just looked at. It was a pretty violent drop for the IWM, when it plunged through that 50-day moving average, found support like the other indexes at the 200-day line. But we'll see. We'll see how small caps do. It is an area where you tend to see a lot of good growth stories, and in a lower interest rate environment, you'd expect these to continue to do well. So, but lagging right now when compared to the Nasdaq and the S&P and the Dow.
Certainly. And here's a look at RSP. This is the equal weighted S&P 500 ETF for a look at breadth here. So emphasizing the mega cap tech influence on the declines today. The S&P 500 itself down 0.9%. This equal weighted ETF down 0.3%. So maybe underneath the surface, things holding up a bit better, as you were saying.
Yeah, that's why I thought it was worthwhile to look at RSP. This is the equal weighted ETF. So underneath the surface, still some pretty decent action in individual stocks. You really can't say the same thing about QQEW. This is the equal weighted Nasdaq 100 ETF. This percentage decline for QQEW was pretty much in line with what the Nasdaq 100 did. So on the Nasdaq, it was a lot of chip stocks acting weak today. You had some software stocks, a lot of gold stocks were weak, but ended up having pretty decent days. I mean, the declines in the gold space were pretty orderly. You can see GLD just came down to the 10-day moving average. So yeah, pretty orderly decline for gold, even though they were some of the worst performing stocks today.
Okay, let's take a look at some stocks. Here's ONON. Inside day down 0.6%. Bullish session yesterday on Wednesday, up about 4.2%. So nearing a buy point here, Ken, or above an early entry still if you like to get in a little early before those traditional buy points.
Yeah, it was a heavy volume breakout attempt yesterday on IBD Live. We were saying we'll just kind of watch how the breakout progresses as the day wears on, and it came off highs. But I was encouraged. I'm still encouraged by the setup here, and the decline today came in very very light volume. It held inside of yesterday's intraday range, so this is a setup that still looks interesting to me. It is a polarizing stock. It is volatile. The last time they reported earnings, they had a nice breakout and rallied pretty well. So I'm still keen on the company's growth story here. I still think there's a good runway. And again, just like the fact that in the second quarter, that revenue growth of 27% was a nice acceleration from the 23% growth they marked in Q1. So still watching this one. Breakouts need a healthy market, to work. So if we continue to see selling pressure build in the indexes, that's probably going to, weigh on most stocks, including ON's breakout attempt here. But still like the fundamentals here, and I think it's a good one still to keep watching.
And out of China, here's a look at PDD, Ken, earnings in 4 days.
Yeah, I really wasn't aware of Temu. This is a heavily discounted site that is part of PDD, and this is. I think there was a research report earlier this year that said the Temu app was one of the most downloaded in the App Store in the U.S. So there's something like 50 million monthly active users in the U.S. For Temu. I bought some stuff from Temu just to check it out. So this is really the growth story that is driving PDD right now. And while you have an economic situation in China that has been slow to recover, consumer is still generally weak in China. You look at PDD and you look at some of the top line growth this company has delivered. I mean, revenue growth. You don't see too many companies where revenue growth has accelerated for 4 or 5 quarters in a row. A lot of this is because of the strength of the Temu business, and still compelling fundamentals here. And yeah, even though the economic situation in China is still challenging, names like JD.com, Alibaba having a hard time getting going. Still like the setup of PDD, and the fundamentals are what's driving price performance here. And I think it's a name to watch among very very few actionable stocks now in China. This one looks to be one of the Cadillacs.
hmm Okay, we'll put it on our earnings watch list. Let's also take a look at DoorDash earnings out of the way here. And that was an upside catalyst for the stock. What a wild day on the report. A big outside day, upside reversal after earnings. And it's been steadily climbing since, it looks like.
Yeah, this is another what I would refer to as sort of the Cadillac in its industry group. Just online deliveries. I really like to look at this base here. You can see the recent catalyst was a nice earnings report that showed 23% top line growth, and yeah, a little bit of accumulation as the stock is working its way higher here. So we swing over to the weekly chart. The base looks pretty good. It needs a little more work. It pulled back relatively mild 31%. That's within the threshold we'd like to see. Coming off the lows, there have been some nice weekly volume bars there, so could be adding a handle here, and could be an actionable stock soon. Again, strong fundamentals, strong technicals here. Good one to watch, and we'll see if this base eventually yields a breakout. Market could be getting challenging here, but want to keep a watch list of stocks that are, setting up nicely here.
And it'll be really interesting to see how not only the rest of this fiscal year goes for them. They do have a fiscal and at the calendar year end of December, but I'm seeing a 2025 estimate here, Ken, pointing to a lot of growth after a number of years of not turning a profit, expected to turn a profit this year and really ramp things up next year.
Yeah, companies on the verge of profitability that are showing that good top line growth are very much worth paying attention to. You can see DoorDash has got a lot of good fund sponsorship, so there are plenty of growth managers that have latched on to the growth story here. So you got good fundamentals and a good base taking shape, and definitely one to watch here.
All right, let's do one quick bonus one because I also saw this in the notes, Ken. Actually, the weekly chart, kind of similar in some ways. The depth of this base rather for Shift4 Payments, ticker FOUR here, 39%. So a little bit deeper, but it's carving the right side with a mild decline this week, maybe forming a handle. A little bit wild here, this stock, but seeing some blue volume spikes in recent weeks for Shift4 as well.
Yeah, it's a little wild like ON, and again, that is something to keep in mind. But again, just looking at the technicals here, you got 2 weeks in a row of really solid price gains. And again, it was a strong earnings report that was the catalyst. And as the stock works its way higher, like Shift4 Payments does, it rose in very heavy volume up to that 8 level, and now it's kind of drifting lower in light volume. So this is exactly what you want to see when a handle area forms. It's sort of like the last shakeout before a possible breakout. So in terms of a technical setup, yeah, some wide and loose price swings, but lots of accumulation in recent days, and then a low volume pullback here. If this market can hold itself together, we could see a breakout try over the 80 level here.
Yeah, it's definitely tightening up in recent sessions. And I agree. I like that volume profile too. All right. Well, that is it for today, everyone. Thank you so much for tuning in. Be sure to check out IEBD Live tomorrow morning, investors.com/IEBD Live for all of those details. Also, you can catch me on Barney & Co. on Fox Business around 10 a.m. Eastern tomorrow morning, talking about the market and stocks to watch. So I will see you there. Thanks so much, everyone, once again for tuning in, and we'll be back tomorrow.